Bitcoin is a digital currency. It exists only online. It was created in 2009 by an anonymous person or group called Satoshi Nakamoto. Bitcoin is decentralized. This means no government or bank controls it. Bitcoin works on a technology called blockchain. Blockchain is like a public ledger. It records all Bitcoin transactions. Everyone can see the transactions, but no one can change them. People use Bitcoin for many reasons. Some use it to buy goods and services. Others use it as an investment. Bitcoin is global. People can send and receive Bitcoin anywhere in the world. Bitcoin is different from traditional money. It is not printed by governments. Its supply is limited. There will only ever be 21 million Bitcoins. Bitcoin halving is a key event in the Bitcoin world. It happens approximately every 4 years. During a halving, the reward for mining Bitcoin is cut in half. Miners are like the accountants of the Bitcoin network. They use powerful computers to solve complex math problems. When they solve a problem, they add a new block to the blockchain. This is how new Bitcoins are created. The reward for mining a block is how new Bitcoins enter circulation. Before the first halving, the reward was 50 Bitcoins. After the first halving, it dropped to 25. The halving process is written into Bitcoin's code. It will continue until all 21 million Bitcoins are mined. This is expected to happen around the year 2140. Bitcoin halving serves a crucial purpose. It controls the supply of new Bitcoins entering the market. This controlled issuance is designed to mimic the scarcity of precious metals like gold. Unlike fiat currencies, which can be printed excessively, Bitcoin's supply is finite. This limited supply is one of Bitcoin's key value propositions. It protects against inflation, a problem that plagues many traditional currencies. By halving the block reward, Bitcoin's inflation rate decreases over time. This predictable decrease is in stark contrast to the unpredictable monetary policies of many central banks. Bitcoin halving ensures that Bitcoin's supply grows at a slower and more controlled rate. This controlled growth is essential for Bitcoin's long-term stability and value proposition. Bitcoin has experienced 3 halvings so far. Each halving event has had a significant impact on its price. The first halving occurred in 2012. The price of Bitcoin rose from around $10 to over $1,000 in the following year. The second halving took place in 2016. Bitcoin's price saw another surge. It went from around $600 to almost $20,000 in the subsequent year and a half. The third halving happened in May 2020. Bitcoin's price increased from around $8,000 to an all-time high of nearly $69,000 in 2021. While past performance is not indicative of future results, the historical data shows a correlation between Bitcoin halvings and price appreciation. This correlation is often attributed to the supply and demand dynamics that halvings create. Section 5. Bitcoin halving and price volatility. Bitcoin is known for its price volatility. Halving events often exacerbate this volatility. In the months leading up to a halving, Bitcoin's price can fluctuate significantly. This volatility is driven by speculation and market sentiment. Some investors buy Bitcoin in anticipation of a price surge after the halving. Others sell their holdings, fearing a potential price drop. The halving itself does not directly cause price changes. However, it creates a psychological impact on market participants. This psychological impact, combined with the underlying supply and demand factors, contributes to Bitcoin's price volatility. It's important to remember that Bitcoin is a volatile asset. Investing in Bitcoin carries risks. It's crucial to conduct thorough research and understand the potential risks before investing. Section 6. The impact on Bitcoin miners. Bitcoin halving has a direct impact on Bitcoin miners. When the block reward is halved, miners receive half the amount of Bitcoin for their efforts. This reduction in revenue can make mining less profitable, especially for miners with high operating costs. Some miners may be forced to shut down their operations if they are no longer profitable. However, halving can also have a positive impact on the mining ecosystem. It can lead to a more secure network. Miners who can withstand the reduced rewards are typically the most efficient and committed. Furthermore, halving often leads to innovation in the mining industry. Miners are incentivized to find more efficient mining hardware and techniques to remain profitable. This innovation benefits the entire Bitcoin network. Section 7. Supply and demand dynamics. Bitcoin halving highlights the fundamental economic principles of supply and demand. By reducing the rate at which new Bitcoins are created, halving constricts supply. If demand for Bitcoin remains constant or increases while supply decreases, the price of Bitcoin is likely to rise. This is a basic economic principle that applies to various assets, including commodities and cryptocurrencies. However, it's essential to acknowledge that Bitcoin's price is influenced by numerous factors beyond supply and demand. Market sentiment, regulatory news, technological advancements, and macroeconomic trends all play a role in shaping Bitcoin's price. Bitcoin halving serves as a reminder that Bitcoin operates within a complex ecosystem. Understanding the interplay of various factors is crucial for navigating the cryptocurrency market. Section 8. Long-term implications for Bitcoin. Bitcoin halving has profound long-term implications for Bitcoin. By design, halving events will continue until the maximum supply of 21 million Bitcoins is reached. This finite supply distinguishes Bitcoin from traditional fiat currencies, which are susceptible to inflation due to unlimited printing. Bitcoin's scarcity is often cited as one of its most attractive features, particularly in an era of increasing concerns about inflation. As Bitcoin's supply approaches its limit, its scarcity is likely to increase its value proposition. This scarcity, combined with growing global adoption, could potentially position Bitcoin as a digital store of value akin to gold. The long-term implications of Bitcoin halving are still unfolding. However, it is clear that halving plays a central role in shaping Bitcoin's journey toward becoming a global, decentralized, and scarce digital asset. Section 9. Bitcoin halving versus traditional fiat currency. Bitcoin halving underscores a fundamental difference between Bitcoin and traditional fiat currencies. Central banks control the supply of fiat currencies, often leading to inflation and devaluation. In contrast, Bitcoin's monetary policy is predetermined and governed by code. Halving ensures a predictable and decreasing rate of inflation, eventually reaching zero when the maximum supply is mined. This contrast highlights Bitcoin's potential as a hedge against inflation. As fiat currencies lose purchasing power over time, Bitcoin's limited supply could make it an attractive alternative for preserving wealth. Bitcoin halving exemplifies the disruptive nature of cryptocurrencies. It challenges the traditional notions of money and offers an alternative system based on decentralization, transparency, and scarcity. Section 10. Preparing for the next halving. As the next Bitcoin halving approaches, it's essential to stay informed and prepared. Keep track of the halving schedule and follow reputable sources for updates and analysis. Consider the potential impact of halving on your investment strategy. If you're considering investing in Bitcoin, conduct thorough research and understand the risks involved. Remember that past performance is not indicative of future results. Bitcoin's price is influenced by a multitude of factors, and halving is just one piece of the puzzle. Educate yourself about Bitcoin, blockchain technology, and the broader cryptocurrency market. Knowledge is key to navigating the exciting and ever-evolving world of digital assets. Section 11. Conclusion. Bitcoin's journey of scarcity and value. Bitcoin halving is a testament to the ingenuity of Bitcoin's design. It is a mechanism that ensures scarcity, controls inflation, and underpins Bitcoin's long-term value proposition. As we approach the next halving, it's an opportune time to reflect on Bitcoin's remarkable journey. From its humble beginnings to its current status as a global phenomenon, Bitcoin continues to challenge conventional thinking and reshape the financial landscape. While the future of Bitcoin remains unwritten, one thing is certain: halving events will continue to shape its narrative, driving its evolution toward becoming a truly scarce and valuable digital asset. The journey of Bitcoin is far from over. Halving events serve as milestones along this journey, reminding us of Bitcoin's unique properties and its potential to revolutionize the way we think about money. Disclaimer: the information provided in this video is for educational purposes only and should not be considered as financial advice. Please do your own research before making any investment decisions. Don't forget to subscribe to our channel for more updates on Bitcoin and other cryptocurrencies.